Hello friends, we'll be discussing an illustration which will be completely related to issue of debentures in case of collateral security or as a collateral security. Now, let me first give you an explanation or rather a brief summary about what collateral security is. If in case you approach any bank for any kind of loan, they ask you for two necessities. Either it's a secured loan, either it's an unsecured loan. Most of you guys would have thought about an unsecured loan whereby you just have to provide your income statements, which determines the credibility and the eligibility of you as or rather how much loan you can take. Similar to that, we have secured loans whereby you put on something as a mortgaged value or rather mortgage item, and certain percentage of that value is given to you as loan. For example, if you have a house worth rupees 50 lakhs, you might get 60% of that value if you keep the house as a mortgage, and you get 60% personal loan or rather 60% of loan on that specific asset. Now that is a mortgage thing that happens. Now in certain scenarios, if you're not able to go through or if you don't have any kind of mortgage thing that you can keep like an asset with you, in such scenarios you can also put up collateral security as debentures. That means you can issue debentures worth a value which is more than the amount of loan that you're taking. For example, if you want a loan of 10 lakhs, you might go ahead and issue debentures worth rupees 20 lakhs, 15 lakhs, etc. to that specific lender, and he will take that thing as a consideration or rather as a security amount, and he'll forward you the loan of 10 lakh rupees. That is the simple process. So this is one phase of collateral security. Collateral security can be also taken in case if there is any additional or secondary requirement that is needed. That means supposingly your loan amount is huge, you have already mortgaged your asset or rather your house, you still need something else. That secondary thing can be collateral security. So again, when in that scenario, you can also go ahead and issue debentures for certain interest or rather certain collateral security, which can be called like this. Now when it comes to cases or rather accounting theory, we understand that this collateral security is a kind of loan that is being taken or rather that is being procured by some lender by giving out certain assets or giving out certain debentures of your own company. So that gives them the right, if at all you don't repay the loan, they will go ahead and liquidate that thing, sell off your asset, and they'll recover the amount from you in case if you are unable to repay the loan amount. Now we'll go on to the case studies that we have to discuss here, and we'll have certain case studies related to the same concept so that you can understand in how many different scenarios we can go ahead and issue collaterals. So let's start with this illustration. Now, these three case studies that we'll be studying will be related to issue of debentures when it comes to collateral security. So let's start with the case one details, what will be mentioned in the question here. Now, the question or rather the case one states that Messrs. Delhi Limited issued certain debentures of 7% in the year 2016 in two phases. Now it has been mentioned as two phases. So let's go ahead and figure it out. Now, the phase 1 details of this case study says that Delhi Limited issued 7% 10,000 debentures at rupees 100. Now, these were payable as follows. Application they took around 20 rupees, allotment around 60 rupees, and final call around 20 rupees. Now, all these debentures were fully subscribed and paid for. This is phase 1. Now, phase 2 also mentions that loan was procured for worth rupees 15 lakhs by issuing 20,000 7% debentures of rupees 100 each. That means to procure a loan for 15 lakhs, they had to issue debentures worth rupees 20 lakhs there, which was paid in the year 2019. That means the current year it was paid off. So this is what they have mentioned here. Now, 2016, this loan was taken. 3 years later, this amount was completely paid off. Now we have to pass the journal entries and we have to make the balance sheet as well. Now this is case 1. Case 2 will also have certain similar details about collateral issue, or rather a mixture of collateral issue, 2 or 3 collateral issues being done here in one specific year. This will be given to you. The next thing that we'll be doing is, in case 2 we'll be also doing some reiteration related to the previous entries so that you don't lose touch on them. So we'll have certain issue of debentures just like phase 1, phase 2 we did in this case. Let's go on to case 2 now. Now, the second case states that Messrs. ABC Corporation issued 7,010% debentures of rupees 100 at rupees 120, of which, or rather for which, they received a subscription worth rupees 15,000, or rather worth 15,000 debentures here, of which they went ahead and already rejected 5,000 debentures, or rather 5,000 were refunded back and the balance was allotted as per pro rata. This has been given here. Now on application, allotment and final. Application they are taking 30 rupees. Allotment they are taking 60 rupees, which includes the specifications related to premium as well. And the final call takes around 30 rupees. Now, Mr. Y, there is one debenture holder who defaulted on the final call for 600 debentures, which has been mentioned. Now, the question also states that soon after this happened, or rather, soon after the final call was called, they expanded their production and, or rather, they took a loan of 20 lakhs and issued debentures worth rupees 100 here for an amount of 25 lakhs. That means collateral security was given at 25 lakhs. Same 10% debentures were issued, but the issue price here was 100 and not 120. So, this has been mentioned. So we're supposed to prepare the journal entries and the balance sheet here. Now, journal entries will have all the details. So balance sheet has to be provided, or rather it has to be done in a specific manner. Now we'll go into the case 3 details. Now, Mrs. Y Foundation have also issued 10,000 debentures of 8% each year of rupees 100 at rupees 80. That means this is issued at discount. They received a subscription for 19,000 here, of which 7,000 they went ahead and refunded, and whatever balance was left, they allotted them as per pro rata basis. This has been mentioned. Let's figure out how much application, allotment, and final amount they are taking here. On application, they took around 20 rupees. On allotment, again 40 rupees, which is net of discount. And on final, they took around 20 rupees here. Now, again, they have mentioned that Mr. A defaulted on allotment and final call for 100 debentures, and so did me, or rather, so did Mr. B for 400 debentures. That means 500 debentures in complete default of allotment and final call, which has been mentioned here. Now, the company has also mentioned that they have issued debentures of 8 lakh, or rather 8,008% debentures of rupees 100 each, to secure, or rather to procure a loan of 6 lakh here. And this was for the daily production requirement, whatever reasons they have mentioned here. We have to pass the journal entries and the balance sheet. Now that we know all the details of these case studies that we have to go ahead and solve, let's start with the journal entries of case 1 now. Now, in case 1, we have a complete description of phase 1 and phase 2. So we'll start with phase 1 entries first. That means receipt of application money on debentures. As in the question, they have mentioned that the issued were also 10,000 debentures and the receipt was also for 10,000 debentures. That means no oversubscription, no undersubscription here. Completely at par. So that will be 10,000 debentures multiplied by 20 rupees on application. That is phase 1 here. So we have mentioned that. So the first thing that we have mentioned here is being receipt of application money, which has been clearly done. The next thing will be transfer of this application money to debenture account. So the next entry that we have mentioned here is debenture application account debit to 7% debenture with the amount of 2 lakh being completely transferred. Now it's time to mention the allotment due here. Let's start with the allotment due entry. Now on allotment, they're taking rupees 60. That means you have to mention that specific thing here. 10,000 into 60 will be the phase 1 entry for allotment due. Now that we have mentioned the entry for allotment due, that means debenture allotment account debit to 7% debenture, 6 lakh rupees has been mentioned here. That is the allotment due entry. Let's mention the narration there. So now that the narration has been also mentioned, it's time for us to go ahead and mention the details of, or rather, receipt of allotment money here. As in the question, they have mentioned that there is no calls in arrears or any kind of calls in advance as mentioned in the question. There is nothing like that. Hence, whatever money was due, we have assumed that we have received all of it. That means bank account debit to debenture allotment is the entry. 6 lakh is the amount. Let's mention the narration down there. Now that these details have been mentioned, let's go ahead and figure out the last phase, or rather last part of phase 1, which is going ahead and preparing the details of final call due and final call receipt. So let's mention that. So the next entry that we are passing right now refers to final call due. Let's mention that. So the entry has been mentioned here, that is debenture final call account debit to 7% debenture. 10,000 is the number of debentures multiplied by 20. That is the amount of final call, which will give you a value of 2 lakh rupees, which has been mentioned. That means being due on final call. The next entry will refer to receipt on final call. So let's pass that entry. Now, as there are no calls in arrears that has been mentioned in the question, hence we assume that the whole amount of 2 lakh has been received here. Let's mention it and then we'll pass the narration down there. Now, the next phase refers to the specifications of loan being taken into consideration. That means there is a liability that we have here which has to be paid off. Hence, we are taking this loan and that is coming into our bank account. So, here we understand that loan is a kind of liability and the asset is supposed to be taken here. Now, whenever debentures are being provided as collateral security, there are two methods that you can do. Either you can pass no entry and you can just mention there in the balance sheet that whatever number of debentures have been issued, a note is sufficing enough mentioning that this is secured against the loan that we have, or this has been issued as a security against the loan that we have. If you mention that in the balance sheet, more than enough. There is another method to it where you can pass journal entries related to that. So before that, or rather before we could go ahead and pass the journal entries, we have to mention the details of the loans that we have received. So our bank account will be debited because we are receiving that much of amount in cash into your account, and a liability account, that is a loan account, will be created here. So let's mention that first. Now, when we're talking about this specific debentures being issued, so you cannot directly go ahead and mention that bank account has been debited and loan account has been created. That cannot be done. Hence, in order to resolve that thing, because what will happen, will make sure bank account is being debited and a loan account has been credited. So bank account will have that much of amount and loan account will also have that much of amount. So balance sheet is solid right now. But you're issuing debentures against it. That means again the liability side will have these many debentures ensuring that this is the specific value that has been issued there. So that will be a kind of double digits, or rather double entry for the same loan. Hence, we are passing this entry. The first entry that will be mentioned while this loan is opened up, that is debenture suspense account debit to X number of debentures or X percentage of debentures which are being issued there. So whichever issue happens, this entry is supposed to be passed. It's a very simple entry. Suspense account is created because we don't know how exactly the amount is getting transferred to us. Hence, debenture suspense account debit to dash percent of debentures. When the amount is repaid, simply reverse this entry. That means dash percent debenture account debit to debenture suspense account. Here, what will happen is that whatever balance you have of debentures will get closed off related to that loan itself. So we'll pass that entry first. So the entry that we have passed here is debenture suspense account debit to 20,000. That is the number of debentures that we have issued and the rate of interest on which it has been issued. That means 20,000, 7% debentures account has been credited here, and the amount will be mentioned as that many debentures being issued there. So 20 lakh of debentures are being issued here for a worth loan of around 15 lakh rupees. Let's mention that. Now, I've highlighted the year in green here, 2016 has been mentioned. The reason being, this loan was taken in the year 2016. Now, when it go ahead and close this balance sheet, or rather close this loan in the year 2019, they've mentioned that they repaid this loan. So that entry will be passed. We're just naming it as 2019 entry, and the entry that will be passed here will be reverse of what we have passed right now. That means debenture suspense account that has been debited will be credited, and 20,000 7% debentures account which has been credited in this entry will be debited here. It's a complete reverse entry. So let's pass that. So the entry has been mentioned here, the reverse entry has been mentioned, the amount has been also mentioned. Let's go ahead and pass the journal entry, or rather the narration to this journal entry, which will be the closure of this specific journal entry now, post which we'll be going and preparing the balance sheet. Now, I've mentioned one detail there, that is no effect for the balance sheet in the year 2016, because if you pass the entry, or rather effect of this specific entry in the balance sheet for the year 2016, that will be incorrect, because this entry has been passed in the year 2019. So this is just an optional entry for your reference that we have given. The effect will be seen in 2019 balance sheet. But right now the balance sheet that we are preparing refers to only 2016. So let's figure out how exactly we are able to justify all these details mentioned here. Let's start with that. Now, liabilities and asset, or the balance sheet has been prepared in the kind of format rather has been prepared. Let's go and mention the details of bank account first. Now, we'll mention the details of the bank account only until the final call entry, that will be the phase 1 details itself. Phase 1 debentures entry, whatever we have passed, will show the effect here, and phase 2 debenture entries, or rather phase 2 details, will be marked in red color. So you will get to distinguish between what is phase 1 entries and what is phase 2 effects that has been mentioned. So let's start with that. So in the asset side, we have mentioned cash and cash equivalent. With the bank account, phase 1 has been clearly mentioned there. Again, in the bank account, phase 2 will be mentioned when we go ahead with the next part of it. So let's mention all these details here. Phase 1 relates to bank account. So total of all the details. So cash and cash equivalent has been mentioned as bank account, which comes to a total of 10 lakh rupees. Simultaneous to that, we'll go ahead and prepare the shareholders fund of debentures which has been issued in the phase 1. So let's start with that. As there are no call scenarios, hence we can directly mention the amount of phase 1 here, 7% debentures. So shareholder debentures, or rather shareholder fund for phase 1, 7% debentures has been mentioned here. The next part goes to phase 2, that will be marked in red. Now, what exact entries do you need to pass, or rather what is the thing that you need to create here, will be mentioned. Now, if you can see, we have mentioned long-term borrowing. Now, for long-term borrowing, we have issued collateral security. That is again a liability here. That means debentures are being issued. So debentures are always shown on the liability side. Hence, that amount has been mentioned. Simultaneously, we have taken a loan. So that also has to be incorporated here. So hence that has been mentioned as loan procured 15 lakh rupees, and the liability, or rather something that is issued further, has been mentioned as 20 lakh rupees debentures being issued. Simultaneous effect will be shown on the asset side. One will be the debenture suspense account, which will be a part of non-current assets, and the next one will be the effect on bank account, because that will be the total of recipient money that we have received here. Now, we have procured a loan of 1 lakh rupees, or rather, if you have procured a loan of 15 lakh rupees here, 15 lakh rupees are in your bank account. Hence, it is shown on the asset side here. Now, the second last entry that you had passed, that is debenture suspense account debit to 2000 or 20,000 7% debentures. That debenture suspense will be a part here, or rather a part of non-current assets that will match up the whole balance sheet. Now that we have mentioned all the details of case 1 in the balance sheet here, let's go ahead and figure out the tally of the balance sheet. It's obvious that both the asset and liability side will tally because they have marked each other in the similar manner. So the total of the balance sheet that we have here is somewhere around 45 lakhs, which has been mentioned here. That is the part of the balance sheet that we have taken, or rather the case 1 gets completed at the end of this balance sheet. Now the next thing that we have to go is figure out the details of case 2. How to go ahead and prepare the details will be using the same format, same techniques, and everything will be the same. Only the numerical values and the entries will slightly change here because the second case study refers to premium on that part. So let's start with that. Now in case 2, it is referred about Messrs. ABC corporations who receive subscriptions for 15,000 debentures. So let's pass the entry for that application first. So the application that was received was 15,000 multiplied by 30 rupees on application. Make the calculation and we'll mention the total on the outside columns. So 4,50,000 is the amount. We'll mention the narration down there. Now, in the case 2 that we have already passed the entry for receipt of application money. Now, we'll pass the entry related to refund that has been done here for X number of shares. So let's figure out the refund entry now. Now, this refers to the specifications related to 5,000 shares being refunded completely. So we'll pass that entry. So in total, 1,50,000 has been refunded. Let's mention the amount and then we'll post the narration there. Now, once this application refund has been done, whatever balance is left has to be transferred to debenture capital account, which will have certain amount of allotment adjustment also. The reason being, out of 15,000 applications, you have only submitted or rather refunded only 5,000. That means 10,000 are still there and you can allot a maximum of 7,000 debentures here. So 3,000 excess amount, or rather application amount for 3,000 debentures are still with us, which will be utilized in terms of allotment. So let's transfer the amount. Now, out of 4,50,000, if 1,50,000 has been refunded, that means we have a balance of 3 lakh rupees. So that will be the debit side total here. Now, here when it comes to application, we have only 7,000 applications that can be allotted. 7,000 multiplied by 30 will refer to debenture application capital only. So balance amount that we have here as terms of debenture allotment adjustment is only 90,000, which has been mentioned. Let's mention the narration now. The next entry will refer to allotment due, but as this case refers to allotment being done on premium, hence we'll take the security premium also into consideration. Let's pass the entry for that. The total allotment amount refers to 60 rupees, out of which 40 rupees is the capital and 20 rupees is the premium. So let's bifurcate that accordingly. for 7,000 debentures. So total amount due on allotment is 4,20,000, out of which 2,80,000 is the capital amount and 1,40,000 is the premium amount which has been mentioned. So let's go on to the receipt entry now. Now, when it comes to calls in arrears, or rather when it comes to receipt of allotment money, there was no calls in arrears. It was only Mr. Y who defaulted on the specifications of final call which has been mentioned. So there are no calls in arrears in terms of, or rather in terms of allotment money being received. So need not worry about that. Just pass the entry related to allotment receipt. Now, when it comes to allotment adjustment, or rather receipt of allotment money, we understand there is certain amount that we already have. Hence, we're not supposed to expect the whole amount on the allotment, but there will be certain less amount that will be coming into our bank account because we've already received some amount in the past. So 4,20,000 is what we were expecting. 90,000 we have already received. So the difference is something that we have received in our bank account. Let's mention the narration down here. Now, the next part will refer to final call due. Now, on final call, we're supposed to expect 30 rupees per share. So, allotment money will be 7,000, or rather, the due amount will be 7,000 debentures multiplied by 30. So, narration has been also mentioned. Now, we'll come to the receipt entry, whereby there are certain calls in arrears here. Now, when it comes to final call received, 18,000 is the calls in arrears because 600 debentures of Mr. Y weren't paid for rupees 30 each. That means total of 18,000 wasn't paid. Rest everything we have received here. Now, soon after this, they have mentioned that they took a loan here for the production basis. Now, the loan amount was 20 lakh rupees what they have taken. However, they issued a debentures amounting to 25 lakhs as a collateral security. So, we'll pass the entry first. Now, that amount has been also mentioned. If this entry, or rather if the question that was mentioned, if it has mentioned that it has been repaid there, then you have to reverse the entry in that specific year. Like the previous case study that we have done, we won't be passing the entries here so that it doesn't cause any further confusion in that. So make sure that if the amount is paid, this will be completely reversed off. Let's mention the narration, post which we'll go ahead and figure out the balance sheet here. Now with this, we complete the journal entries here. We'll move on to the preparation of balance sheet now. Now when it comes to case studies, or rather balance sheet of this case 2, we'll again part them into phase 1 and phase 2. Phase 1 refers to the regular applications of debentures. Phase 2 refers to allotment of loan here, or procurement of loan. So phase 1 will be done with blue, phase 2 will be done with red. So let's start with the bank account first. So the bank account total, after subtracting all the refunds and call scenarios, we have a total of 8,22,000. Now the next part will be the debentures account. We'll first mention the capital value of 7,000 10% debentures here. That comes to 7 lakh rupees, out of which call scenarios will be subtracted. So the total here comes to 6,82,000. The next part will be securities premium. Now your phase 1 is done. Let's start with the phase 2, whereby loan has been procured, bank account will be changed, or rather debenture suspense account will be mentioned on the asset side, which will reflect the bank details, and securities for loans will be mentioned here. Now on the liability side, we have long-term borrowing mentioned as 10% debentures issued here for 25 lakhs, and long-term loans or rather loan procured 20 lakh has been mentioned. Now debenture suspense will refer to 25 lakhs and the bank account will show the increase of bank balance by 20 lakh rupees. Now, we've mentioned all the details here. It's time to go ahead and tally these balances. So, the total balance sheet has been mentioned. Now, this is one kind of balance sheet that we have prepared. In terms, if you have to mention, you cannot mention debenture suspense account, loan procured, or anything like that. You just have to mention long term borrowings and the debentures issued totally. So, in real sense, if the balance sheet has to be prepared, it will be prepared in the following format that I'll be showing you next after this balance sheet. So the balance sheet total comes to 53 lakh 22,000, which has been mentioned. Let's go on to the actual balance sheet that can be prepared, or ideally that is meant to be prepared. This is only for your explanation that has been done. Now, when it comes to cash and cash equivalent, it will be a total of bank account actual total which will be mentioned. So 8 lakh 22,000 is what we're seeing in the previous balance sheet. Now, this will have total of suspense account as well as the total of bank account that we have received here. So we'll mention that. So the bank account will have a total of 8,22,000 plus the loan amount that we have procured, that is 20 lakh rupees. That will give you a total of 28,22,000. Now, apart from this, the next one will be the non-current accounts or rather non-current assets, which will have details of the specific debenture suspense account, but we won't mention the name, we'll just mention the amount 25 lakhs. Now, similar to that, on the liability side, we'll have debentures, long-term borrowing, and the total of securities premium here. So, both the debentures which has been issued, 25 lakhs plus the total of one which has been issued earlier, will be taken into consideration. So if 25 lakhs debentures worth of debentures are issued, basically they've issued 25,000 debentures multiplied by 100. So 25,000 plus 7,000 which has been issued earlier. In total, 32,000 debentures have been issued of rupees 100 each. Subtracting the calls in arrears, whatever totals we have got, we'll just add those totals. That is 8,22,000 plus 25 lakhs of debentures which has been issued. Now, the total here that we'll mention in terms of debentures for 32,000 debentures issued is 6,22,000 what we had earlier, excluding the share premium, plus 25 lakhs of debentures being issued. So we'll mention that. So that comes to a total of 31,82,000. We'll add security premium to this. Now that will be another total of 1,40,000. And after this, the long-term borrowing that refers to the loan that we have taken for 20 lakh rupees. Now that we've mentioned all the details, let's finalize the total and see if it matches the previous balance sheet or not. So both the total matches to 53 lakh 22,000, which is as similar to the previous one. So here we complete the case 2. Now it's time to move to the last case, that is case 3. Now, when it comes to case 3, we understand that 10,000 debentures were issued. However, we received an amount of 19,000 debentures here. So, we'll pass the entry related to subscriptions received first. That means application money received. So the application money we have received here is on 19,000 debentures multiplied by 20. That will give you the amount of application that you have received here. Now, after this receipt, they refunded 7,000 debentures, so we have to pass that entry now. Now, this will refer to 7,000 refunds being made multiplied by 20 rupees per application. So refund of application has also been done. Now it's time to transfer the application money to the specifications of debenture capital only. But along with that, we have certain applications. So out of 19,000, 7,000 were refunded. 12,000 debentures were allotted 10,000. So additional 2,000 debentures application money we still have with us. So that will be a part of debenture adjustment or debenture allotment adjustment. Now 3,80,000 is what we had received, 1,40,000 is what we have refunded. So the balance will be the debit side total in this entry. So that will be a total of 2,40,000 on the debit side. On the credit side, 8% debenture will have only the total of 10,000 debentures being issued multiplied by 20 rupees. That will be 20 or rather 2 lakh rupees here. So the difference is 40,000, which can be adjusted further. Let's mention the narration here. Now, once this is done, we have to go ahead and mention the allotment due entry. Now, when it comes to allotment due, we understand that there is discount on this application, or rather in this case study. So we'll take the discount also into consideration. So now this 8% debentures account, the entry that has been mentioned here is debenture allotment account debit, discount on the specifications related to debenture allotment account debit, or discount on allotment debit to 8% debentures here, which has been mentioned. Now the allotment money that they're taking here is 40 rupees, but this is net of discount. That means if you have to add the discount amount, that will give you the total capital of allotment. That means 40 rupees is what we'll be expecting. 60 we cannot expect because we have already given discount of 20 rupees. So total 60 will be mentioned on the credit side. However, allotment will be only for 40 rupees here. So the amount that we'll be expecting here is a total of 4 lakh rupees itself. Now, this is the amount that we're expecting, but there is certain adjustment that you have to make. Debenture adjustment allotment of 40,000. So total that we'll be receiving here is only 3,60,000, because out of 4 lakh, again 40,000 will be adjusted. So whatever we have received is 3,60,000. Also, there are certain calls in arrears that you have to take into consideration. So let's pass the entry accordingly. Now, a total of calls in arrears here were for 500 shares, and both 500 shares, or rather 100 for Mr. A, 400 for Mr. B, total 500 shares or 500 debentures defaulted on allotment and final call. So those are calls in arrears. Let's mention that. Now, the total that we're expecting here is 4 lakh rupees. Let's mention that on the credit side. 40,000 is something that we can adjust, so that has been also mentioned on the debit side. Let's mention the calls in arrears now. So total of 20,000 is the calls in arrears. That means out of 4,60,000 we are not receiving. Balance 3,40,000 is what we have received here. Let's mention the narration accordingly. Now, after allotment is done, final call will be due. Let's mention that. Now, on final call, they are taking 20 rupees. So 10,000 multiplied by 20 will be the amount, that is 2 lakh rupees. Now, the next entry that will be passing here is receipt of final call money. So again, the expected amount is 2 lakh rupees here. 500 debentures failed on paying 20 rupees. So we'll mention that as calls in arrears. So total of 1,90,000 is what we have received here. Now the last entry that will be passing here is the loan procurement entry. That is debenture suspense account debit to debentures account. Now that the same has been passed here, we'll go on to the preparation of the balance sheet, which is the last part of this illustration. Now when it comes to balance sheet preparation, the first thing that we'll be doing here is the bank account total. Now this bank account total will only refer to the amount of bank transactions itself. So 7,70,000 is the total of bank account. The next will refer to loan procurement bank. So the loan was procured for 6 lakh rupees, which has been mentioned here. Again, phase 1, phase 2. Let's go on to the debentures part now. Now the next thing that we'll be mentioning here is the 8% debentures capital, post which calls in arrears will be subtracted. Now 10 lakh is the debenture capital, post which will subtract the calls in arrears. So the total of debenture account what we have here is 9,70,000, which has been mentioned. The next part will be discount, which is miscellaneous and will be moved to asset side total. So 2 lakh rupees is the discount allowed. Now the next item that we have to mention here is the debenture suspense account and the long-term borrowings. So basically long-term borrowings and the next phase of debenture account. So 6 lakh is the long-term borrowing. 8% debentures issued here is the debentures what we have issued as collateral security. Similar to this, it will reflect in our bank account. 6 lakh will be in the bank account. 8 lakh will be as a part of long-term assets, or rather we can talk about long-term non-current assets. Bank account phase 2 has been mentioned there. The next thing that we have to mention here refers to the last part, that is non-current assets. This is debenture suspense account. Now that we have mentioned everything, it's time to figure out the tally of this. So the total amount that we have here at the end of the sum is 23,70,000, both on the liabilities and asset side. So this marks the closure of this specific sum. I hope the illustration has given you a lot of clarity. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.